Hello, and welcome to RAMmagedon, our next iAdmin session. It's my privilege to introduce our keynote speaker, James Ions. James is a L3 pre-sales engineer at Park Place Technologies. James leverages his expertise engineering to solve a wide range of infrastructure challenges and optimize IT environment performance. Just as a quick guideline notes, if you have any questions, please use the Q&A tab on the right. If you'd like to add any chats to the general group of visitors here, you can use the chat feature as well. And any other questions, if we don't get to them today, we'll definitely speak to you Wednesday. Thank you. Bring it on, James.
Yeah, thank you for the introduction, Chad. Appreciate that. I guess I would start with a little anecdote about how I arrived here. And some years ago, an IT sales leader that I was standing talking to at a Christmas party worked out that I had some talent for speaking at the same time as to match the talent that I had with actually fixing things and explaining things. So I don't know whether I was pushed forwards or whether everybody stepped back, but that's how I arrived at this situation today. So welcome everyone, and thank you for taking the time to listen to my short presentation here. Hopefully it'll be insightful and hopefully raise a few eyebrows and talk about maybe a few controversial things going on in the IT landscape today. And anyway, welcome. Today we're going to cover RAMmagedon, and we'll get to that bit in a second. But what is it? The high-level causes, what we're seeing out there in the terms of trends, practices. What are the options for you guys out there today, clients, customers alike? And what about solutions? And what are Park Place and SEI bringing to you today to ease your pain, so to speak? So moving swiftly on and without further ado. So referring to, again, RAMmagedon and RAMpocalypse, I guess I would say that they're two of my least favorite phrases to come out of the IT sphere. I don't know what I'd replace them with, but anyway. So why are we talking about it? So RAMmagedon or RAMpocalypse, again, refers to the severe, and I'm going to say severe global supply chain shortage of memory, and namely DRAM and NAND memory, okay? And as again, the surging prices that we're seeing out there today that all of you guys are recognizing today for regular memory, flash and disk memory and media alike. Although this particular situation has been identified in maybe around 2024, we've seen this before, right? We've seen the crypto craze and the chase for GPUs. We've seen COVID times and supply chain constraints and such like, and the inability to get personnel people and parts and engineers and generally anything that you needed, you couldn't get it to where you needed it to be. Okay. And again, we've seen silicon shortages in the past, which have meant shortages of disks and shortages of chips and all kinds of associated. But short side of this is even since I started writing this presentation, we've seen enhancements to the predictions as to how long this is going to go on for. So initially I read some papers, and the predictions were out until 2027. But now, even in the 3 or 4 weeks in the preparation for this kind of presentation, we've seen markers in the sand and statements saying around 2029 or way out until 2029. So this is something that's not going to go away in a hurry. Why are we seeing this? So we're seeing the shortages of what we need and the increased prices due to the following reasons, or within there. And there's some controversial statements and topics here, but let's cover a few of them off. So infrastructure demand, right? We're seeing an unprecedented demand for GPU-based technology, and in sympathy with that, the high bandwidth memory required for such architecture. And you might say whether it's required or whether it isn't, because again, down the side of is the FOMO for this situation driving the bubble itself? We're seeing customers investing in this situation and big business chasing AI without a clear plan, but we'll get onto that. So overwhelming demand for NAND and DRAM and HBM for GPU-based systems. And again, in plowing all of that technology into AI and cloud-based data centers. The demand for that is insatiable at the moment, and there's a few facts and figures coming your way around that. NAND and DRAM proliferation. So it's not only the demand for AI and cloud-based infrastructure, the reason why we're seeing increase in these prices. The regular demand for NAND and DRAM is also incredible, right? It's not something that's going away. It increases every year, right? NAND and DRAM proliferation, the already high demand for memory chips in everything from phones and cars via wearables and smart devices and everything out there in the Internet of Things, from toasters to fridges, you name it. They've got NAND and DRAM memory incorporated into their builds, and that's only going to increase. Everything that is attached to the internet, everything that's required to store data on a temporary or permanent basis is going to require these chips. Okay. Few facts and figures to start with, right? So if you think about the demand for memory and such like, right? NVIDIA's latest GPU, the Rubin, comes with up to 288 gigabytes of HBM per chip, right? High bandwidth memory. This is being sold of racks of up to 72 chips, 72 GPUs. So again, just in their regular deployments, the demand is insatiable for this stuff. 70% of the global supply chain of this stuff goes into those AI and cloud infrastructures. Why else are we seeing? Why else are we seeing this shortage and this increase in price that seems to be on a trajectory upwards that we don't know where it's going to go yet? Production shift and corporate buying power are another couple of reasons, right? So manufacturers have pivoted away from their production toward high value AI chips and high bandwidth memory, right? So away from regular DRAM, away from regular NAND chips to those to build those high value, high margin products that they can drive up their profits, right? So manufacturers are pivot away from this production toward high value AI. In late 2025, OpenAI placed an order for HBM chips to the tune of 71 billion, right? That's a crazy figure. Followed in early 2026 with another successful funding round, and they raised over 110 billion. So this thing is funding itself, right? The primary investors, so among the primary investors named, were Nvidia and Amazon themselves, right? But it's not just the big players that are playing into this. At any given time, an AI startup with as much seed money as they can get their hands on can go out and buy all of the HBM, so GPU tech that's out there immediately available, and they take up a significant of that supply, right? Away to the highest bidder, right? I read an article, and I'm referencing some of this here. Through 23 to 25, 200 AI startups with seed funding to the tune of 2.3 billion, right? Investment combined, were buying into the AI structure, the requirement for NAND and DRAM. And just as a side note, 90% of those failed, right? So 90% of those companies that were trying to buy their way into AI, so to speak, failed. So there's a lot to be answered for in that section too. So furthermore, so we have market skepticism versus control, and this is a little controversial as well, right? So skepticism from manufacturers in the longevity of the AI boom has caused some reluctance to scale and meet the current demand for NAND and DRAM. Okay, where do we go? Where do we go with some of that? So again, is the refusal to scale the primary suppliers of NAND and DRAM are three key companies, right? And they essentially, due to the skepticism because of what we've seen before, the increase in demand for GPU around crypto craze and such like that, there wasn't an adjustment in the amount of production taking place. So small steps have been taken, but not great ones. Okay. And again, the gluts of the past causing low margins for these manufacturers are maybe a thought in the back of their minds as to why maybe they should just hold the market where it is, right? So Hynix, Micron, and Samsung are, potentially making hay while the sun shines, right? Strategic underinvestment, refusal to scale for demand, shifting focus from AI-specific infrastructure, driving up these margins in all product verticals and not just HBM, right? Because let's remember that the chips required for the high bandwidth memory are just the same chips we need for our mobile phones, for our cars, for our that Internet of Things that I was referring to earlier. Okay, so again, thinking along the lines of, is there something to be said that AI FOMO is driving the AI bubble? Are companies investing in these situations without a clear plan? How can we make a balance? How can we help ourselves, right? How can we use things, how can we use AI constructively? How can we invest conservatively and how can we still balance the books today across IT infrastructure and such like? So what are we seeing out there, right? Regarding the OEMs, and to name a few, IBM, HPE, Cisco, Dell, and their friends, right? We're seeing rising prices of above 15% just in this quarter, just in the quarter just finished alone in Q1. Okay. In some senses, in some verticals, we're seeing OEM revenue and profit margins increasing. Okay. Supply chain challenges from their side, increased lead times in the orders that you might place over, 6, 12, 18 months. We're also seeing the availability of configurations restricted, right? So you might be able to get your hands on the volume of architecture that you want in the form of full form factor server and such like, but your configurations are going to be limited. The amount of memory that you can have associated with that configuration might be restricted to make sure that they can meet all of their clients' demands, right? You'll find high pressure tactics from the OEMs out there, limited time offers and short validity of quotes, right? High pressure tactics, price lock-ins, both good and bad, right? You might find that some of that pricing is effective or palatable, but again, price lock-ins driving you to make that decision under pressure as quickly as possible. And hopefully we here today can help you maybe not have to make those decisions under quite so much pressure. Okay. We're also seeing, and again, changes in end of service life policy, right? So which leaves you without critical information that you can base your decisions on. Okay. We've seen a number of the OEMs over the last few years make last minute decisions about end of service life dates and such like for HPE systems and IBM systems. And there's no clear guidance as to when they might go end of service life. So when you're trying to be compliant and such like, you have no clear guidance to follow. You don't really know either what kind of service you're going to get in place of that after that aforementioned alleged end of service life. So the highlights over 2026, we're looking at a predicted 130% increase in prices for DRAM and SSD throughout 26 into 27, and possibly higher prices in future. We're going to try and address some of what you can do about that today further in the presentation. We're seeing increased pressures on IT leaders to make the right decision at the right time, and again, under pressure. We're seeing ambiguity on policy from the OEMs, and unexpected cost at all corners, right? What am I hearing from clients that I speak to and the colleagues around me? We're seeing the recognition of those dramatically increased costs every day, further costs. If you don't buy it this week, it'll be more expensive next week. All right, we're seeing extended lead times. We are seeing that even in our business. We are under pressure, right? No doubt. Budget deficits due to exceptional costs at all corners as well. Budgets set in 25 and 25 to 26, 26 to 27 didn't or won't meet rising costs. Devalued currency and market volatility, again, few are playing into this kind of situation. Increased baseline costs on salaries and utilities, again, not just in the UK, but globally, due to extrinsic factors that we can't control, such as war, such as demand. These are things we have to look out for and are not helping you make your decisions. Challenges, increased costs, lead times, and deficits, as we've already said. So the highlights: budgets are under attack from all sides. Lead times, when will I get my hardware? Hopefully, Park Place will be able to help you with that and can alleviate some of those pain points with some of our solutions that we have available here for you. What's the right path? What's the right decision? Is there a right decision? Is there a right path to take? Balance has surely got to prevail. Bit of column A, bit of column B. presenting to you here two separate articles that were written a year apart. One with the prediction around IT spending and just regular IT spending taking up much of budget increases, right? And a year later, a published article that basically the affirmation that the prediction came true. That might not be, sensational, but it proves the fact that we did have foresight of what was coming. There were murmurs. There was that insight to be had if people were listening, if people were reading, right? But again, just that your requirement on a refresh or requirement for upgrade, that cost of that budget that was possibly allocated wouldn't even cover your regular IT spending, right? Most of what you have available to you today is going to go on just keeping the lights on, keeping staff happy, paying the right member of your team the right amount, the right amount to keep your staff, to protect against them moving on to other places, to keep your teams together and keep that continuity within your business. So again, regular spending was forecast to take up a lot of those budget increases that you might be able to get your hands on. So that is even outside of what you're going to be expected to spend or find for IT refresh and expanding or augmenting your architecture. And again, I apologize that some of this might be insightful and some of it might be PTSD to you. So do bear with me. Challenges to solutions. So what are we doing here today? Is the hybrid approach the best way, or is it even the only way? Okay, so just a high level case study to talk through, right? So at the point of refresh, with a 5 to 10-year-old compute hardware infrastructure, you might have a full spread bet of that, right? But anywhere beyond 3 years, and you start to turn your attention to what comes next in my server, my compute environment, right? And what do we think about, right? An x86 compute architecture running VMware or an other virtualization situation, maybe running Microsoft or Linux over the top of it, or a flavor of the same. You have a Unix infrastructure or an IBM I infrastructure, some Cisco and Brocade. What do we think about? Initial forecasts of budgets, maybe they won't stretch. OEM lead time, maybe 6, 9, or even beyond that. If you're ordering new systems from HPE or IBM, whoever that may be, again, you might be able to get your hands, even if you can get your hands on the budget, you may not get your equipment for 9 to 10 to 12 months down the line. So again, that creates challenges for itself. Initial configurations, as we've discussed before, initial configurations required might not be available, right? Or might not, what you need your new compute architecture to stretch to or be capable of might not be available. So where can we help? Skills and resource shortages. Again, the quality of manpower, quality of skills available. Again, what further problems for IT leaders to think about and to scratch their heads over? Additional margin costs, time versus effort, additional costs in removal and disposal of tech and ITAD. So again, consider the following that may be available to you, and what can we do? Migration to public and private cloud. There are options: PPT or OEM, cyber security, data protection, capex versus opex. What model would you like? Is there an initial amount of capex that you can invest and then have the rest applied to operational expenses? Can you amortize the position you want to get to? What else is available? TPM maintenance, 30 to 40% of the cost of cost reduction against the OEM, for example. Consultation. Try and having consultants come in from Park Place, review the architecture that's there, what can be saved, what can be upgraded, what needs to be refreshed, what's good for now, what can be brought into line with where your requirements are moving forwards. Clearview is a product available from Park Place. It's just a purely consultative product. It gives you access to that information at hand that you might need to make the informed decision when you need it. Technical support for software through Microsoft, through Linux, through Unix, VMware. Curvature hardware upgrades. sister company, the availability of NAND and DRAM, optics and transceivers. Remote managed services available at the fraction of the cost of where you might see elsewhere. Transition planned work. Yeah. Allow someone else to take on that bespoke environment, that bracketed amount of effort, skill. Allow yourselves to be able to focus on your unplanned work. Available again, 24/7, 365 for a defined cost. So fix that cost in and amortize it. Professional services that are available across from the OEM or Park Place alike. Migration support, staff augmentation, remote hands. iTAD, the deinstallation and the removal of that legacy equipment as it comes of age, as it comes to the end of its life, and that's a life that defined by yourselves and your consultations and your consultants alike, not necessarily the prescribed life of the OEM. So what can we do today? Let's review very briefly what's available from Park Place Solutions. Hardware and software support, hardware maintenance and software technical support. Bring down the cost of that legacy architecture, that tech debt. IT professional services, asset lifecycle management, data center relocations, data migration. We recently looked at the process of a data center relocation, and we were able, instead of moving that client's hardware from one location to another, that legacy hardware, we were able to help a client dispose of that tech debt and move them into the cloud on an IBM iSeries platform. And again, just very brief anecdote, right? It's always interesting to be able to consult and be able to explore other solutions. Discovery services, iMac, and that addition and that availability of IT manpower available that we're offering. IT asset disposition, as we've said before, the removal and disposal of that tech debt as the new systems come in. IT deployments, remote hands, staff augmentation, and wireless transformation. Infrastructure managed services, remote managed services, infrastructure as a service, be that private, be that hybrid, be that cloud infrastructure, wherever you might need hybrid cloud infrastructure, wherever you might need it. All right. Disaster recovery as a service sits out there again. You can move that, migrate that that tech debt, that's those services, that software, those services, migrate them into a situation where they can be in the cloud, transfer it to a OpEx setup. So again, you're going to avoid that need for that high expense right at the front of that investment. We can amortize most of your investments that you would make instead. Backup and data protection as a service. Again, we're moving those situations from that on-site dependence, those tape libraries they might have. If you've got VTLs, all of those services are available in the cloud, and it doesn't necessarily have to be your full environment. Keep your production on-prem, but move the backup and test environments into the cloud. Look at alternative solutions. Again, keeping your production server or compute environment on-prem, move that backup and recovery into the cloud as an option. Again, and there's public cloud available also. A situation that you, again, might be of insight here. So Curvature, the hardware arm of our business, invested in over $1 million worth of NAND and DRAM, as well as optics, in the advancing state, or as we ran up to this situation that we found ourselves in today. So if you can't get the configurations that you require from your OEM, there's two situations where this really works. If you can't get those configurations that you require from your OEM when you're investing in your refresh, look to the likes of us at Curvature to be able to upgrade those systems with the NAND and DRAM that we have available to you. So again, memory and SSD is available from Park Place today via the hardware arm of our business. That helps you twofold, as I said, upgrade what you have coming in and to meet the requirement of your services, upgrade those systems using Park Place memory and Park Place SSD. Also, maybe use it to augment existing environments. So whatever your architecture you have in place, take a proportion of that and use some of that budget to increase the productivity of that infrastructure instead of investing to meet the demands, right? So instead of um, purchasing new equipment, bring some of your legacy equipment into line where possible, accepting the fact that that's not always going to be the answer. Looking at some
James,
alter. Yes, sir.
sorry. We're just at the very tail end of time. I do have one question. Is it okay to ask?
You should certainly ask. This is the final slide, by the way.
Well, maybe go ahead and finish. Sorry to interrupt. Go ahead and finish.
So just blending some Park Place solutions with what we can provide you from our OEM partnerships, right? And again, uh, the point that we're trying to get to, I guess, is a blend of solutions and offerings that may bring you the key answers and help you make those decisions to minimize the impact of what's going on in the external IT environment. Again, right? So the availability of OEM hardware from Park Place, right? The IBM hardware, the HPE hardware, Dell hardware partnerships we have in place, and access to those that could possibly help, as well as providing you those upgrades that you might need. So again, providing you that blend of services and blend of offerings that really maybe bring the cost, bring your and cost meets challenges and problems, right? So again, available from Park Place, from the OEM, those managed services, the IBM Power Cloud, the public cloud that may be required, those professional services and consultation, right? Automated IT ops, application modernization, artificial intelligence or access to, and cloud strategy, right? And the consulting approach to go with it. That's why we're here today to talk about this. So sorry, Chad, I was just finishing off there with what we had access to from an OEM front rather than solely a Park Place perspective.
Yeah, no, that's wonderful. Sorry to have interrupted.
No
Just
problem.
one time for one quick question here. And the question is a bit of, as customer support demands increase, how does an MSP balance, increasing support charges to meet their demands versus obviously retaining them long term as a customer? And I think, James, obviously you deal with this every day. I think the answer lies somewhere in between of showing the additional value add of a partner that truly knows their infrastructure and can help them optimize. But please, in your own words, share your thoughts.
Yeah, of course. So if you're coming away from you're looking to optimize your support costs, right? So and if you're coming away from OEM support, there might be a number of fears, right? Is this company that I'm looking at really qualified to do what I need them to do? um, how am I what is the right architecture to move into that space, and what is it, what isn't, right? And there's a couple of thoughts that I would leave you with, right? Everything that Park Place supports today out in the wild, from 20-year-old architecture that is required to be there for access to legacy data, or maybe customer data, maybe patient data that we maintain out there in the weeds for our clients, through to the latest technology, the HPE Gen 12s, your IBM Power 10s. Everything that we support today, we bring through a product development phase, right? We bring this stuff into our labs, we break it down, we build it back up, right? From the perspective of knowing how to fix the system, having access to the, the, the the data, the access to the information on how the system operates, to how parts and components are replaced. We analyze this stuff from the ground up. We break it down, we build it back up. We train our engineers. We make sure we've got access to details on remove and replacement procedures. We make sure that we can um, provide components into all of the geographies around the globe that we pertain to support in, right? So when we're telling customers that we can support, it's not just that we thought about it for a couple of minutes and thinks that's pretty similar to something else. Absolutely everything that we do is thought about, budgeted, um, built from the ground up, as you would expect any project to take place. And we will know how systems fit together. Customers can have confidence that we build solid solutions, from monitoring to acquisition of components, purchasing and provisioning. Park Place is far from just a technology organization. It's a global logistics organization too. We're going to be able to meet our customers' demand and SLAs across the globe. So when customers think about swapping an OEM support for Park Place support, they've got to know and have confidence in us, and we will always consult. Another aspect of this, if we will, the Clearview report that I mentioned during the presentation, right? We will absolutely be consultative. If something is not a good fit for third-party maintenance, and there are reasons why, we will tell the customer this. We will consult around it. If systems are a risk for third-party maintenance, we will tell them why, and we will tell them how, and we will help them measure that risk so they can make informed decisions about how to best, make budget stretch, because that's what we're here to talk about today. And I hope that answered the question, Chad.
Absolutely. No, fantastic. Thank you so much, James. Our session is just about up here. There is some group networking right after this, so I will end this session here in just a moment, but please look for that pop-up window and you can migrate over to your peer networking. Thank you so much, James.
Thank you very much.